Hi, my name is Jarrett with SMB Bookkeeping, based in Orlando, Florida. And I wanted to make a video today to go through the steps of recording profit and loss and balance sheet accounts in Excel. Oftentimes smaller, medium-sized businesses, especially when they're first getting started, they may not use a third-party accounting software. It's fairly common. Especially when the business is bootstrapping in the beginning and getting started. Typically, that's the time frame where the business hasn't began working with a bookkeeper or an accountant or a tax professional yet to go through those steps to meet those requirements. Certainly having a shoebox full of receipts at the end of the year is one way to do it. And another way to do it is to keep those transactions in Excel, which is a little bit of a better way to be organized. And still, we're not going through the cost of hiring a professional and paying for these third-party softwares, and we're not processing payroll, those types of steps. Below the video, I'm going to include a link with the cleanup workbook that I use, that I've created. It is a workbook that I use when working with small and medium-sized businesses, and it'll be a blank workbook that anybody can download in Excel, and it'll have everything that's needed to keep track of the transactions, keep organized throughout the year. Pretty simply, no cost. That way, at the end of the year, when a business owner is ready to begin working with a professional, anytime, anywhere, they'll be organized and they'll be ready. It's going to reduce the hours and the time frame that it's going to take to complete the work, and it's going to save some money. So I'll include that link below. Also, please feel welcome to send me a direct message anytime. Send me an email, and I'll send over the workbook for anybody who can use it. So to get started here in QuickBooks Online, I did want to review one item before moving to the workbook. So here in QuickBooks Online, I'm going to run a report here, and I'm going to run a standard report. I'm going to run a profit and loss report and a balance sheet report, and then I'm going to run a trial balance report to show the difference. So for the profit and loss, we'll run the profit and loss for this year to last month. We'll run a cash profit and loss report, and we'll see the transactions here. We're going to have total income. Yep, we'll have total income. We'll have our expenses. We'll have our net income as well. 1745.27. That's just the total income less the expenses. I'm also going to run a balance sheet just to review those accounts as well. And we'll run the balance sheet for this year to last month. We'll run a cash balance sheet, and we'll see our checking account, our other assets, liabilities, and equity, which are the main parts of a balance sheet. We have assets at the top. Those equals liabilities plus equity. So if we simply deduct our liabilities, what the business owes, from our assets, what the business owns, what we'll have left over is our equity, what the net worth of the business. So when I run a trial balance, the only thing that the software is going to do is it's going to take the profit and loss and it's going to put it on top of the balance sheet. And that trial balance is a helpful report to take a look at before we move over to a work paper document. Let's see here. We'll see. Yep, right here. I'm going to type in trial balance. And this would be what would be known as unadjusted trial balance, which is part of the year-end process for adjusting reports. And this year to last month, we'll run a cash report, and we'll see the same amounts we saw on the P&L, starting here with our income. Our income here and going down. These are our P&L accounts. And then we'll see the same amounts we also saw on the balance sheet as well. That's the top. So we'll have assets here. We'll have liabilities here. we'll have equity here, and then we'll have income and expenses. So the trial balance is helpful to review for a business owner or someone who may be interested in getting into bookkeeping or accounting, because in the work paper there is a tab for adjustments. It's very helpful to keep track of those adjustments. And here on the trial balance, we'll see that all of the expenses are simply debits on the left side. I typically find that if someone's using the workbook, if they can simply remember that expenses are always debits, always on the left side, which is visually, we can see that here on a trial balance, that's about 95% of the transactions that'll be adjusted for. That's all the expenses, and that's a really big help. Okay, so I'm going to bring up the workbook. It's a very helpful workbook that I've created. It has a balance sheet for the prior year and the current year. I always like to tie out the prior year and the current year. As a professional, it's important to tie those to the tax filings as well for a number of reasons, but just in general for bookkeeping and for books cleanup purposes and for the process, having the prior year balance sheet tied out to the current year balance sheet is very helpful, very important. Also for the P&L, same thing. I'll also have the P&L for prior year as well and current year. It's not as key for the P&L prior year to be tied out, but certainly helpful as well. And all of the cells all have the calculations included. So we'll have the calculation there for standard inventory, beginning plus purchases, less ending. That'll give our cost of goods sold. Those sorts of standard adjustments. And our calculations rather. And then we'll also have the balance sheet will tie out to the totals. We'll have our total assets, total liabilities. We'll see our owner's equity there as well. I did make a video recently for adjusting for an amortization schedule, which I included the link to the amortization schedule in the video. I did want to make an adjustment here in the workbook just to show how the transactions would be included. So here in the amortization schedule, this was for a food truck that was purchased as an example. Excuse me. As an example, for $115,000, we had an interest rate, number of years, periods per year, typically 12. Here I've just simply totaled the interest paid for the year, all 12 months, and I've also totaled the principal paid for the year, all 12 months as well. And these transactions would be each month. So we could go into the workbook here, the cleanup workbook. We could go to the P&L and we could go to the interest expense here, and we could enter each of those transactions here. So I would enter equals plus, and for example, these aren't going to agree to the exact amounts, but 655.21 plus 654.75 plus 655.49. So that would represent the interest payments on the prior amortization schedule. However, I'm also going to show this adjusting journal entry tab here. I'm going to add that adjustment here as well. Similarly, how I added it in a QuickBooks Online video, the adjustment entered into the QuickBooks Online software, and this is going to allow us to see how those same adjustments can be kept right in here in Excel. Very helpful, very simple, no cost way to keep those records and keep those books. Okay, so I'm simply going to enter an adjustment here so that we can see how we're sort of going through the process of updating the books here in Excel manually. So I'm simply going to add a row here, one row above, rather there, and I'll add one row above. Yep. And then I'm actually going to add the account here. It's going to be interest expense. And the interest expense from the amortization schedule was $79.0825. And I'm also going to add the principal that was paid. And the principal is going to be a debit to the balance sheet account. That's going to reduce the long-term note payable. Principal was $13,088.71. And we'll see, just like at the bottom of the trial balance that we ran in QuickBooks Online, here at the bottom of our adjusting journal entry, those debits and credits will tie out, they'll equal. And debits and credits equaling is how we know that the books are in balance. And so I'm going to just reduce the bank account by $29.96 and 96 cents. So those will tie out. I've also tied out these accounts to the P&L and the balance sheet. So now when I go over to my PL, I'll see my interest expense there. I'll see my balance sheet amount there for the note payable. Yep, we've reduced the principal there. Let me just double check that adjustment. Yep, we reduced the note payable balance by the principal amount that was paid for the 12 months. Yep, so that'll agree the bank account's been reduced. Yep, so this is how we'll clean up the books. And again, some businesses might, especially in the first year or two, as they're getting started, might find it's better to keep the transactions. Simply keep the simple bookkeeping in P&L and balance sheet, the adjustments in a worksheet, rather than an Excel worksheet, versus going through and signing up for all the services and hiring a professional. And so I'll include that link below. I'll include a link for that worksheet below. Thank you very much and have a nice day.